Good to have you back on. There was a story out, I believe it was in Bloomberg the other day, that one small cap ETF, the IWM, took in something like a couple of billion or $1 billion just on Wednesday. Small caps have outperformed. Do you believe that we are sort of finally seeing this rotation everybody's been talking about from the names we know into the names we don't?
Well, the next week or so is going to be vitally important for the rest of the year because, I've been, as you mentioned, cautious a little bit here about this rally because, let's face it, the market is very, very expensive still, and maybe slightly less expensive than it was at the beginning of September, but very, very expensive, so people need to be careful. However, we're in the fourth quarter of the year. Institutional investors, if the market keeps rallying, no matter what they think of the long-term value in the marketplace, they've got to be in the market, and that could push things higher. And so what I'm looking at right now are groups like the Russell 2000. If it can continue to rally and see, because we are starting, this part of the rally is starting to broaden out a little bit, which is bullish. So I'm watching that and the chip stocks, which have been a great leading indicator for the market lately. And if those things, we might see a little bit of a breather here very near term over the next day or two, just because we've had a nice run. But if they can rally further as we move further into October, that's going to be bullish for the market at least between now and the election.
Yeah, because, here's sort of the dirty little secret of the rally that we had coming off the lows in March. You and I have access to programs where we can look at every single stock and what they're doing. Most people just look at the averages. They see the S&P up and they say, good day. We had plenty of days, Matt, and you know what I'm talking about, where maybe 90 stocks out of 500 were in the green, 410 were down, but those 90s were big enough that the average was higher. Now we're starting to have days where 400 stocks are up and 100 are down. Exactly, and that's a big difference from what we were seeing, even early in the bounce off of the this kind of the sell-off we had in September, and that's a bullish sign. I mean, yesterday in the S&P 500 was the advanced decline was 6-1 positive. I mean, that's not a blowout number, but it's positive, and it's much more positive than we've seen. We've seen that. I'm sorry, on all the updates this week. Good, solid breadth. So this is something that has got me. It's like I said, when we get past the election, I'm a little bit more concerned than a lot of people, no matter who wins, if the market rally continues to rally, because I think the COVID situation, a second wave, is going to be bigger after the election than now. But that doesn't mean that we can't rally between now and then, especially because momentum is such a key player in the marketplace right now. And as breadth is widening out, if we can finally see the market, this rally pick up, see a little bit of a pickup in volume, those internals will actually be positive. So I'm cautious longer term because of the expensive market, but near term, it definitely has some upside potential. What looks attractive to you right now? Is it just small caps matters or something else that's on your radar? Well, one of the big things, you mentioned rotation. That everybody's talking about rotation. I think people think about for the short term and the longer term is, again, we're a little worried about what will happen with the second wave as we get further into the colder weather, and that could slow things down. So going to some of these value names, or especially some of these industrial, economically sensitive groups, a little bit less enticing to me. What I like is a rotation within the tech sector. Yes, these great companies, the mega cap names are still great companies, but they're still very overvalued, still overbought on a longer term basis. You can pull back a little bit on those, but instead of going to some of the industrials, start looking at the chip stocks, as I mentioned, the cloud computing names. The future of cloud computing is still in the very, very early innings, so we've got a long way to go there. So what I'm saying is that you don't want to completely dump all of your Apple computer or your Amazon, but if you pare that back a little bit, still look to other part of the technology sector, because that's the future of our economy, no question about it.
Shepard Smith here. Thanks for watching CNBC on YouTube.